Welcome back. So we've seen the equity market reel under the impact of what happened overnight and the whole NVIDIA issue with the US subpoena. Let's find out what's the latest in the world of commodities. We have Manisha Gupta joining in with exactly that. Manisha, earlier we discussed crude. What else are you looking at now?
Well, I'm still talking about crude. Have to put that point across because a very sharp decline is what we are working with. You know, the month of July and August saw the crude oil prices trade in the negative, and the September is started with a very sharp decline onto this one. An overnight decline of 5% is a huge one. The markets were anticipating further decline in crude oil prices, but a 5% cut is something that not many were expecting. So we are now trading at a 9-month lows when it comes to crude. We've broken below 75 for Brent, below 70 for the WTI crude oil prices also, and the charts only have gotten weaker from here. Also, when you look at the Chinese data, all of that has been coming on the weaker side. The manufacturing PMI was weaker, that came in yesterday, and the services PMI number that came in today also has been lower than what the street was anticipating. And then this is a hanging sword really, with OPEC and members will now be increasing production starting from the month of October and gradually increasing it until September 2025. So October will bring in an extra 180,000 barrels per day from OPEC and allies. That would be increase in supplies. Not just that, resolution also seems to be in sight when it comes to Libya, and that was one factor that was supporting prices. But production could be coming back. Exports could begin from Libya starting as early as next week itself. It's something that's weighing onto the markets as well. So when you look at the overall Libya numbers, what the street is looking at is that 959,000 barrels per day is what we saw previous week. This week it declined to 591,000 a barrel. But the kind of high that Libya has been producing, so when you look at the July numbers itself, it has been at 1.28 million barrels per day. So if all of that starts coming into the street from September, that means there is increase in supply from there as well. And it's not just about crude oil prices. If you look at gasoline, well, you have futures declining by 6% overnight. It's a 32-month lows for the gasoline prices also. The U.S. summer driving season is just about ended and the demand hasn't been so great. So if you look at the gasoline inventories, well, those also are high at 218.4 million barrels, which is higher than what we saw in the previous year. So this is another factor. It's not just that. Heating oil prices also have continued to decline. That one is trading at a 15-month lows. We've seen 4.5% of a decline in last month. And the dollar index trading at a 2-month highs, rather 2-week highs, is another thing that continues to weigh onto the market. All eyes right now, of course, are the global markets and then the U.S. non-farm payroll data. That would get you on where the street can move on from here.
Okay, all right. Manisha, thank you very much for that.